And yo, yo, yo to the yo, yo, yo for you. I made it. And in today's event, thank you very much for visiting. If you are live with me, thank you so much. And for the replay viewers, how much I appreciate you goes beyond all measure. This is BabyPips, brought to you by BeautyBubble, where we are learning cryptocurrency charting following the BabyPips.com lesson structure module, coursework, whatever you want to call it. So make sure that you head on over to BabyPips.com. Something that we do that's a little bit different is in the chat. You'll notice that each one of the modules will be labeled with their unique URL. So if you want to listen to me do the dry read through and then go ahead and follow along on the website, you can do so. I'll go back and forth between showing the chart live while I'm doing the dry read, and then of course going over to BabyPips themselves and running through. All right, so we'll be doing the disclaimer in just a moment. Let me go ahead and bring the Hangout down, open up my window a little bit, and make sure that you guys get to see the BabyPips. Let me make sure that my tabs are working today. Back over the Hangout. Yeah, they work just fine. So tab, tab, tab. Tab, tab, tab. So what we'll do is we'll open up a YouTube. We'll make sure that we are live. And let me see. Doesn't look like we're live just yet. Type in channel name, go here. Make sure that yep, there we are. We're live right there. We'll go here. We'll put it on mute right away. And we'll read the disclaimer while we're all here together. Make sure that we have it over at the Hangout. We do. And we'll get our links out in just a moment. Okay, so welcome everybody. As I said, this is going to be BabyPips.com, learn cryptocurrency charting. We're doing the dry run read through of all of the lessons because over the years, even though I've sent people over to BabyPips, of the hundreds of people, maybe less than 10 people have come back to me and said yes, that they went through the coursework, they really enjoyed it. They've decided that they're going to focus on this particular area of trading as their next way of going into graduate studies, and so few people actually go through the coursework. So it's my mission to make sure that we go through the work, that we see the areas where we can really kind of build a little bit more structure for the cryptocurrency trader. And come to find out, so I'm over at BabyPips. And you'll notice when you're over on the landing page, right, there's the education tab, but then there's a tab called rates, R-A-T-E-S, rates. And you'll think by just looking that, oh, it's all Forex. But if you scroll down all the way down to the bottom, you'll notice that they have cryptocurrency trading view widgets. Now they are only for Kraken, but it allows for you to actually finally, see what a basic default chart looks like. They've adopted it. I think it's fantastic. And there's this cryptocurrency area. So I wouldn't doubt that BabyPips might, in the next few months or what have you, maybe isolate and start doing maybe a couple of courses or modules, lessons, what have you, that are focused on cryptocurrency. But as always is, sometimes I can be 7 to 10 years ahead of the trend. Sometimes I can only be 7 months. And of course, most people that hang out with me think that, maybe I'm really on a lag. I'm more like on a 7-minute lag. But I assure you that I do monitor as many trends as I can. I've always been like that throughout my life. And so that's what I'm thinking, kind of came into my consciousness. I was talking to another trader about, these social channel outreaches and what might be needed. And I so enjoy going live, and I know that I hang out with a lot of people that just really enjoy being part of the technology, and it's just fun, man. It's so cool to think that, I don't know where this how far my voice goes. I have no idea whether or not, maybe even through my own journaling of the coursework live, that it actually elevates my quality, and also that it can fold in on itself and become, even better content out there that already exists. And most of us are trying to do better. It's hard, and it can be very slow going, especially since, I am hell-bent, man. I am going to use my laptop. I am going to use the built-in microphone. I don't give a you-know-what, because this way I can take it anywhere for anyone, and I can bring what I know and to anywhere for anyone. So it's really cool that way. I'm not, tethered whatsoever to know enough about the technology to, be able to turnkey it and go anywhere with it. So I love that idea. All right, let's get into the disclaimer and basically what in the world beauty does. Generally, my social channels are a puree of course, beauty products, methods to remain beautiful, that sort of thing, technology, financial markets, fashion, and books. And basically, I'm a lifestyle channel, to live well, trade well, make money, and do good. The make money and do good has been my motto now for years and years and years. It's really what I stand behind. I know how important it is. Money is not everything, but if you can make money and then do good, you're getting very close to living well. In this video, we will walk through the BabyPips.com site. Hold on just a moment. Okay, sorry about that. So in this video, we will walk through the BabyPips.com site, the beginner's guide to Forex trading, with a special focus on cryptocurrency charting. This is a rapid-fire run-through of the course modules and how to navigate the site for maximum results. At times, the video may be in audio only or in pause for breaks approximately every 10 to 15 minutes. Content value. On a scale of 1 to 10, there has been no preparation or script written, and the quality of production is very low. So it has been pre-rated at a 2. So don't get all over me, about that I needed this and I needed that. We're just trying to get the content out there so that maybe we can rework it. There is no affiliation with BabyPips.com or TradingView.com, and none should be implied by reference or tone of my voice or the editing of the video or the tone of the video or anything of that nature. There is no affiliation whatsoever with BabyPips.com or TradingView.com. However, should there be an affiliate relationship where commissions or considerations, like promotional considerations, are made to the creator, such as myself, you, the viewer, will be made completely aware here in the description, through my voice, or over the social channels that I frequent and post openly. Then there's the Bitcoin address, the big bugaboo in the room, right? My Bitcoin address. This is very common for cryptocurrency content creators, traders, chartists, people that are in the space to showcase and share their Bitcoin address. Disclaimer, this is the nasty stuff that nobody ever wants to hear, but listen up, okay? Please listen up. Be advised that all content in the charts shown is meant for entertainment and educational purposes only. Trading the stock, bond, currency, cryptocurrency, commodity, and futures market can be rewarding, but it is also risky. Be aware that you can lose money, and in some ways lose more than you have. It can also be profitable, but not without significant risks. You are responsible for your own independent investment transactions. The charts shown are not to serve as an investment advisory service. I highly encourage you to seek professional advice in regard to your own financial decisions. Information you may get from any chart shown and its further discussion in chat rooms or forums may not reflect my opinions. The charts shown and their content is not a solicitation nor an offer for professional investment advice, nor is it an offer to buy or sell stocks, bonds, currency, cryptocurrencies, commodities, and or futures. So there we go. I've done everything that I should do, right? So we're doing good. All right, so let's see. Rats, there I go again with that whole, oof. That's the worst thing. You close out a window and then there you are back at your own dash. You don't want to do that in your life. So let me get back here, get there, get back over to the Hangout, and share the screen again. Application window here, and share, present to everyone, hide that, come down, okay. All right, so at 7 o'clock for the next 15 minutes or so, you will be seeing the BTC USD Coinbase pair. Okay, and so I'm going to have my morning coffee with my family, and I will be back in just a few minutes. Stick around. Okay, guys, here we go. There might be some ambient back and forth a little bit, so I'm not going to be so critical on myself for going in mute mode. So if you don't mind that, then we'll get going on this. All right. So number one, we are here at BabyPips.com. BabyPips.com. We will be handling basic Japanese candlestick patterns. We'll grab that. We'll put it in our pop-out chat. Also grab the URL here, so you guys have that. Pop-out chat, and then for each of the segments, I actually do that, okay? If you have any questions whatsoever, go ahead and put them in the live chat. One reason is that the chat becomes archived and then is made part of the comment section of the archived video. So this is kind of where I'm trying to make sure that everybody goes to, is utilize the comment section over at YouTube. It's actually very powerful, and you can ask me to, you know, you could say, Beauty, when you were saying this at this particular timestamp, then we can go to exactly the timestamp and make sure that your question is shared and then the answer is given. All right, so here we go. It's just a basic read, right? Spinning tops. Who's ready? Japanese candlesticks with a long upper shadow, a long lower shadow, and a small real bodies are called spinning tops. The color of the real body is not very important. The pattern indicates the indecision between the buyers and sellers. The small real body, whether hollow or filled, shows little movement from open to close, and the shadows indicate that both buyers and sellers were fighting, but nobody could gain the upper hand. Even though the session opened and closed with little change, prices moved significantly higher and lower in the meantime. Neither buyers nor sellers could gain the upper hand, and the result was a standoff. If a spinning top forms during an uptrend, this usually means there aren't many buyers left, and a possible reversal in direction could occur. If a spinning top forms during a downtrend, this usually means there aren't many sellers left, and a possible reversal in direction could occur. Never known exactly how to pronounce them, the marubotsu. Sounds like some kind of voodoo magic, huh? I will cast the evil spell of the marubutsu on you. Fortunately, that's not what it means. The marubutsu means there are no shadows from the bodies, depending on whether the candlestick's body is filled or hollow, and low are the same as its open or close. Check out the two types of marubutsus in the picture. There's the white marubutsu and the black one. A white marubutsu contains a long white body with no shadows. The open price equals the low price, and the close price equals the high price. This is a very bullish candle, as it shows that buyers were in control the entire session. It usually becomes the first part of a bullish continuation or a bullish reversal pattern. A black marubutsu contains a long black body with no shadows. The open equals the high and the close equals the low. This is a very bearish candle, as it shows that sellers controlled the price action and the entire session. It usually implies bearish continuation or bearish reversal. Doji. Doji candlesticks have the same open and close price, or at least their bodies are extremely short. A doji should have a very small body that appears as a thin line. Doji candles can suggest indecision or a struggle for turf positioning between buyers and sellers. Prices move above and below the open price during the session, but close at a very near the open price. Neither buyers nor sellers were able to gain control, and the result was essentially a draw. There are 4 special types of doji candlesticks. The length of the upper and lower shadows can vary, and the resulting forex candlestick looks like a cross, inverted cross, or plus sign. The word doji refers to both the singular and plural form. When a doji forms on your chart, pay special attention to the preceding candlesticks. If a doji forms after a series of candlesticks with long, hollow bodies, like white marabutsus, the doji signals that the buyers are becoming exhausted and weakening. In order for price to continue rising, more buyers are needed, but there aren't any more. Sellers are licking their chops and are looking to come in and drive the price back down. And there is a graphic here for long white candle plus the doji. If a doji forms after a series of candlesticks with long filled bodies like black marabutsus, the doji signals that sellers are becoming exhausted and weak. In order for price to continue falling, more sellers are needed, but sellers are all tapped out. Buyers are foaming at the mouth for a chance to get in cheap. While the decline is sputtering due to lack of new sellers, further buying strength is required to confirm any reversal. Look for a white candlestick to close above the long black candlesticks open. In the next following sections, we will take a look at specific Japanese candlestick pattern and what they're telling us. Hopefully by the end of this lesson on candlesticks, you will know how to recognize different types of forex candlestick patterns and make sound trading decisions based on them. And the Bitcoin dollar Coinbase pair on the 1 minute is trading at 33.9788, up 1.65% on the day. And what I think we'll do is, of course, stay with the market until the 9:45, maybe even as long as 10 o'clock today. And so that will give us plenty of time to be able to get through all of our lessons. Should be good. All right. So let's go back over here. So what we'll do is we'll go on mute now. I'll have the rest of my water and then, of course, get my coffee going, like I said before. All right, talk to you real soon. Okay, here we go for the second lesson. Next lesson, single candlestick patterns. Single candlestick patterns. Go ahead and grab the banner, put it over in the chat. The URL so you guys can find it easily on your own. And there we go. All right, single candlestick patterns. Learn how to use single candlestick patterns to identify potential market reversals. Here are the 4 basic single Japanese candlestick patterns: hammer and hanging man. The hammer and hanging man look exactly alike, but have totally different meanings depending on past price action. Both have cute little bodies, black or white, long lower shadows, and short or absent upper shadows. There's the hammer as the price is descending. There's the hanging man as price is ascending. The hammer is a bullish reversal pattern that forms during a downtrend. It is named because the market is hammering out a bottom. When price is falling, hammers signal that the bottom is near and price will start rising again. The long lower shadow indicates that sellers pushed prices lower, but buyers were able to overcome this selling pressure and closed near the open. Just because you see a hammer form in a downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before it's safe to pull the trigger. A typical example of confirmation would be to wait for a white candlestick to close above the open to the right side of the hammer. Recognition criteria for hammer. The long shadow is about 2 or 3 times of the real body. Little or no upper shadow. The real body is at the upper end of the trading range, and the color of the real body is not important. The hanging man is a bearish reversal pattern that can also mark a top or strong resistance level. When price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber buyers. The long lower shadows shows that sellers pushed prices lower during the session. Buyers were able to push the price back up some, but only near the open. This should set off alarms since this tells us that there are no buyers left to provide the necessary momentum to keep rising the price. Recognition criteria for hanging man. A long lower shadow, which is about 2 or 3 times of the real body. Little or no upper shadow. The real body is at the upper end of the trading range. The color of the body is not important, though a black body is more bearish than a white body. Okie dokes. All right. Inverted hammer and shooting star. The inverted hammer and shooting star also look identical. The only difference between them is whether you're in a downtrend or uptrend. An inverted hammer is a bullish reversal candlestick. A shooting star is a bearish reversal candlestick. Both candlesticks have petite little bodies, filled or hollow, long upper shadows, and small or absent lower shadows. Here's the definite description or the graphic of the inverted hammer to the shooting star. Inverted hammer, shooting star. The inverted hammer occurs when price has been falling, suggests the possibility of a reversal. Its long upper shadow shows that buyers tried to bid the price higher. However, sellers saw what the buyers were doing, said heck no, and attempted to push price back down. Fortunately, the buyers had eaten enough of their Wheaties for breakfast and still managed to close the session near the open. Since the sellers weren't able to close the price any lower, this is a good indication that everybody who wants to sell has already sold. And if there are no more sellers who is left, buyers, pardon me, I'll reread that. And if there are no more sellers, who is left? Buyers. The shooting star is a bearish reversal pattern that looks identical to the inverted hammer, but occurs when price has been rising. Its shape indicates that the price opened at its low, rallied, but pulled back to the bottom. This means that buyers attempted to push the price up, but sellers came in and overpowered them. This is a definite bearish sign, since there are no more buyers left because they've all been, I don't even want to say the word. You guys can read the word for yourself. There you go. Next lesson, dual candlestick patterns. Next lesson is dual candlestick patterns. And there you go. That's where we'll be next, okay? We are still in elementary school, as you can see here. The dual candlestick patterns, as you'll notice on the right, is somewhere in the middle of the Japanese candlestick anatomy. It's right here, dual candlesticks. So we have this lesson, another one, a third one, a fourth one, and the summary. So we still have a long ways to go. It's a big area, big module of actually all of the BabyPips.com. So we might have to really take quite a few breaks as we go through this today, okay? If you guys are cool with that. We'll go back over to the chart. And we did get a little pickup a couple minutes ago. And I'll be on mute for just a little bit, guys. I better check out the Twitter first, though. 136 new tweets coming in. And we'll go ahead and we'll just kind of run through, brush through, see if there's any particular new media, new graphics, anything that's just, I figured that Bitcoin, that interview with Peter Schiff would find its way back online. Where there's 120 some. Okay, a lot of mining news today, early on. And then a lot of solicitations too for these lending sites. I would think that would be the next area where the SEC is going to come in and consider them usury under the usury laws, I believe. All right, so 51 results now. As you can see, very difficult to keep up with the social side of it, right? So that's why if you just do a little lifting initially, you know, it might take you a couple of weeks to kind of go through, you kind of know what you're looking for. You don't have to isolate your feed either, where you're only getting, you know, where you've curated it and you've literally culled it to death, because it's very important. You just have no idea, you know, who's going to be coming out with a a Bitcoin piece on Twitter. So that would be my recommendation, unless there's something really, volatile going on. You don't want to keep your eyes and ears open. You don't want to drive yourself crazy either, but you just want to keep your eyes open. All right, go back over to the chart. Check out our chat. And check out the Hangout. Gonna play around with this a little bit more. There we go. Yeah, I think we did a good job. I think we did a pretty good job powering up today. I'll be back on mute. Okay, guys, so welcome to the School of Pipsology. I'm changed the format a little bit. I think what I'm going to do, and I'll put my timer on my phone, and I will go live with the lessons every 15 minutes because not one lesson, really the read-through is not lasting more than 15 minutes. We don't think. So, and even then I could do a lesson that did run for 15 minutes, and then when it was the quarter of the hour, the next quarter of the hour, then I would go live. I think that that'll work out really well. Dual candlestick patterns. Dual candlestick patterns. You'll notice that the URL says double trouble dual candlestick patterns. That's how they called it. What's better than single candlestick patterns? Dual candlestick patterns. Let me make sure that I'm also live. I took my mic off. Yes, we're good. Alrighty. Engulfing candles. Engulfing candles. Bullish engulfing candles on the left, bearish engulfing candles on the right. The bullish engulfing pattern is a two candlestick pattern that signals a strong up move coming. It happens when a bearish candle is immediately followed by a larger bullish candle. The second candle engulfs the bearish candle. This means buyers are flexing their muscles and that there could be a strong up move after a recent downtrend or a period of consolidation. On the other hand, the bearish engulfing pattern is the opposite of the bullish pattern. This type of candlestick pattern occurs when the bullish candle is immediately followed by a bearish candle that completely engulfs it. This means that sellers overpowered the buyers and that a strong move down could happen. Tweezer bottoms and tops. The tweezers are dual candlestick reversal patterns. This type of candlestick pattern are usually spotted after an extended uptrend or downtrend, indicating that a reversal will soon occur. Notice how the candlestick formation looks like a pair of tweezers. Amazing. Tweezer bottoms, tweezer tops is the graphic. The most effective tweezers have the following characteristics. The first candlestick is the same as the overall trend. If price is moving up, then the first candle should be bullish. If the second candlestick is opposite the overall trend, if price is moving up, then the second candle should be bearish. The shadows of the candlesticks should be of equal length. Tweezer tops should have the same highs, while tweezer bottoms should have the same lows. The next lesson will be triple candlestick patterns and will happen at the top of the hour. The next lesson is triple candlestick patterns and will happen at the top of the hour. Be on mute. Okay, we'll be back on mic in just a moment here. We'll go to the chart first at 3,400, spot 44, up 1.72% on the session. Looking a little lazy and a little tired up here, but we still have another hour and a half for the U.S. market to open, so we'll just be patient with it. Thank you very much for those that are listening live, and of course to the replay viewers. Love you so much. As they say, this is BeautyBubble bringing you the BabyPips.com lessons. These are the just dry run-throughs of the content over at BabyPips.com. Make sure that you check the chat, and which will become the comment section once it goes into archive, and you can see the area of the lesson and the URL of the lesson. We're trying to keep that up. So here we go. Every 15 minutes, I will be bringing you a lesson, and the lesson this 15 minutes is triple candlestick patterns. Triple candlestick patterns. So we'll grab the banner, grab it, toss it over to our pop-out chat. Oh, I don't know why that took all that. Triple stick candlestick patterns, and here is the URL. They have a weird little thing stuck, I think, in their HTML. Go to the pop out, and there we go. Okay, and here goes the read through. Evening and morning stars. Evening and morning stars. The morning star and the evening star are triple candlestick patterns that you can usually find at the end of a trend. They are reversal patterns that can be recognized through 3 characteristics, and there's a graphic here. We'll use the evening star, that's the graphic on the right, pattern on the right as an example of what you may see. 1. The first candlestick is a bullish candle, which is part of a recent uptrend. The second candle has a small body indicating that there could be some indecision in the market. This candle can either be bullish or bearish. 3. The third candlestick acts as a confirmation that a reversal is in place as the candle closes beyond the midpoint of the first candle. 3 white soldiers and black crows. The 3 white soldiers pattern is formed when 3 long bullish candles follow a downtrend, signaling a reversal has occurred. This type of triple candlestick pattern is considered as one of the most potent in-your-face bullish signals, especially when it occurs after an extended downtrend and a short period of consolidation. The first of the 3 soldiers is called the reversal candle. It either ends the downtrend or implies that the period of consolidation that followed the downtrend is over. For the pattern to be considered valid, the second candlestick should be bigger than the previous candle's body. Also, the second candlestick should close near its high, leaving a small or non-existent upper wick. For the 3 white soldiers pattern to be completed, the last candlestick should be at least the same size as the second candle and have a small or no shadow. The 3 black crows candlestick pattern is just the opposite of the 3 white soldiers. It is formed when 3 bearish candles follow a strong uptrend, indicating that a reversal is in the works. The second candle's body should be bigger than the first candle and should close at or very near its low. Finally, the third candle should be the same size or larger than the second candle's body, with a very short or no lower shadow. Next pattern, 3 inside, up, and down. 3 inside, up, and down. The 3 inside up candlestick formation is a trend reversal pattern that is found at the bottom of a downtrend. This triple candlestick pattern indicates that the downtrend, is possibly over and that a new uptrend has started. For a valid 3 inside up candlestick formation, look for these properties. The first candle should be found at the bottom of a downtrend and is characterized by a long bearish candlestick. The second candle should at least make it up all the way up to the midpoint of the first candle. The third candlestick needs to close above the first candle's high to confirm that buyers have overpowered the strength of the downtrend. Conversely, the 3 inside down candlestick formation is found at the top of an uptrend. It means that the uptrend is possibly over and that a new downtrend has started. At a 3 inside down candlestick formation needs to have the following characteristics. 1. The first candle should be found at the top of an uptrend and is characterized by a long bullish candlestick. 2. The second candle should make it up all the way down the midpoint of the first candle. And 3, the third candlestick needs to close below the first candle's low to confirm that sellers have overpowered the strength of the uptrend. So that's our lesson on triple candlestick patterns. Our next lesson up at 1/4 will be Japanese candlestick cheat sheet. Japanese candlestick cheat sheet. We'll run over there. That's where we'll be when we return at 1/4. That was excellent. We got this going on now, I think. Okay, coming up to 1/4 and our lesson now is Japanese candlestick cheat sheet. Japanese candlestick cheat sheet. There we go. And the URL will be coming to the chat in just a moment. We go there. Okay, most excellent. Did you click here first? If you did, stop reading right now and go through the entire Japanese candlesticks lesson first. If you're really done with those, here's quick one-page reference cheat sheet for single, dual, and triple Japanese candlestick formations. This cheat sheet will help you to easily identify what kind of candlestick pattern you are looking at whenever you are trading. Go ahead and bookmark this page. No need to be shy. And they've arranged it where it's the number of bars, the candlestick name, bullish or bearish, and what it looks like. It goes through spinning tops, dojis, the white marabutsu, the black marabutsu, single, hammers, hanging man, inverted hammer, shooting star, bullish engulfing, bearish engulfing, the double bars, tweezer tops, tweezer bottoms, morning star, evening star, 3 white soldiers. These are the triples, 3 white soldiers, 3 black crows, 3 inside up, and 3 inside down. That is your cheat sheet. I think maybe what I'll do, I'll make a special note of this on our chat. There's some really good ones too out there. If you go to Google Images, there's some pretty good ones, right? So that alone, all right, so the next one we'll go to is candlesticks with support and resistance. That will be the next lesson, candlesticks with support and resistance. Pardon me. Will be the next lesson at the 1/2 hour. It gives you a chance to kind of read if you want to keep up. And that's where we'll be when we return at 1/2 hour. 1/2 hour. See you then. Okay, we're going to go ahead and wrap it up for the day. The fan is going off for some reason, so I'll check back with you guys later. You can see that the next lesson coming up is in the chat. It'll be also in the comment section. Thank you very much. You've been listening to Beauty Bubble for BabyPips.com, the lesson series on Learn Cryptocurrency Charting. I will check back with everyone later. And good going, you guys, really, for sticking out and doing the BabyPips.com lessons, okay? I think it's a really good program to go through so that you can just, as I said earlier on, for you to just get through it so that you can say, yes, I've been through it, I understand, and this is my area where I'd like to really focus on and then become a little bit more educated and maybe one day be an expert. You never know.